This is the calculator we're going to use to explain CGT transactions. Of course, if you have a certificate from a trust or an investment fund showing the base cost, proceeds, selling price and the gain or loss, then you certainly don't need a fancy calculator, as all the amounts you need are on the certificate for you to enter on the RTR 12. You can simply enter and itemize these amounts on these certificates right here and show the base cost, proceeds, gain amounts straight from the certificates. However, you'll probably need help working out the gain amounts on other types of assets because it can get quite involved, and for that we need the CGT calculator lower down on the screen, where we can add as many different CGT transactions as we wish for a taxpayer. Different exclusions and exemptions apply to the disposal of different types of assets. So the nice thing about this calculator is that we can simply select the different types of assets by clicking on these buttons, and all the appropriate laws will be applied. You can see that we have selected this particular asset as an other asset, as it is a second property as opposed to a primary residence or a small business sale. Looking at this first very simple example, we can see that we bought this holiday house for 2 million rand and sold it for 4 million rand. So we made a profit of 2 million rand. The profit that SARS wants you to enter on the RTR 12 as code 4250 is the 2 million rand profit. SARS will apply any community of property splits, annual exclusions and inclusion rates. If we slide the screen away, we will see the calculator has placed the 2 million rand profit under code 4250. The calculator has also subtracted the taxpayer's annual exclusion of 40,000 rand and worked out that 40% of the balance of 1,960,000 as being 784,000 that will be added to normal income on the assessment calculation. Changes to SARS's definition of remuneration mean that the amount added to taxable income now affects the formulas for calculating the deduction allowed on retirement fund contributions. Sliding our calculator screen over again, we can see that the property was bought after CGT came along in 2001. So working out what SARS calls the base cost and the profit is very simple. The base cost is the purchase price and the proceeds are the sale price. The proceeds less the base cost less certain other costs is the profit or gain. You may claim acquisition costs such as registration costs, legal fees to prove ownership of the asset, etc. Improvement costs you may claim do not include maintenance expenses. If you fix the garage roof, then that is maintenance and you cannot claim it. If you built an additional garage, then that is an improvement and you can claim that. Now what if we bring other costs and expenses into the example? You can see here that we've added acquisition costs of 100,000 rand and we've also added some sale costs of 100,000 rand. This has reduced our profit by the 200,000 rand.